Hello and welcome to another update video about Render. So Render came into the support zone that I communicated in the last video. I gave you basically a zone or a support level here, the 50% retracement, below which price must not go in this particular scenario of a possible impulse which is unfolding to the upside. Because if it breaks below that level, then we have an overlap with wave 1 and it breaks below the 50% retracement, which a wave 4 shouldn't do. So let's zoom out first, just quick view, looking at the bigger picture. The idea is and still was that we're moving up here in a possible leading diagonal, of a wave 1, which would then result in a wave 2 pullback at some point. Okay. In this wave 1, we have a 5-wave move, wave 1, wave 2, wave 3, wave 4, wave 5. These are subwaves because in a diagonal, the waves are all corrective. Now, that creates some challenges. It is one of the, let's say, coins that performed quite well throughout this bear market. It is, however, not an impulse. Nevertheless, the C wave here, which is the last wave of this wave 5 of the wave 1 diagonal, could be an impulse. I think it's not, because basically this pullback that we can see at the moment is at a point where it shouldn't have happened unless we deal with a 1-2, 1-2 setup, but that's unreliable. So I have to assume this is either a diagonal which needs one more wave, and then we have wave 1 of wave C of wave 5 complete. Okay, so this could form a wave 1, which, basically the bullish, the most realistic bullish scenario would be that this is a wave 1, then a pullback in a wave 2, 3, 4, 5 of wave C, of larger degree wave 5, like that. So let me just change the degree here. This is something that can happen. However, diagonals are always unreliable. They are not impulsive. So ideally, this wave 3 shouldn't have pulled back yet. Okay. However, if it's holding the 50% level, it could still move higher, but in a diagonal, that's the problem. They can always go a little lower. So it's all in all, what I said before about this chart, it's a messy chart. You have to expect headwinds because it's a diagonal. It's the whole thing is a diagonal and not an impulse. So it's a bit more choppy, okay? This can happen. So if it turns around now, we could look at this as a 5-wave move up, okay? I might actually, if it is because the wave 3 basically was too short. It should have reached the 1.618 extension in an impulse. So if it's not, then it's either corrective in the top in 3 waves, which will lead to another low, or it could become a diagonal. But as you can see here, the 1.618 extension was at 258 and it didn't reach it. Okay. Nevertheless, it's holding the 50% retracement, so it can still turn around, but just be aware if it loses that, it's again getting a bit messy. Could then find support at this trend line maybe again, and then we take it from there. But ideally, if we get one more wave up, then it is a wave 1, can then pull back in a wave 2, then a wave 3, and so on. Now, in an alternative scenario, we deal with a slightly different structure and would have this as a wave 1, then an A wave down of a wave 2, an overshooting B wave of a wave 2, and the C wave down, which might be unfolding now, maybe also as an ending diagonal into this support area before we can then take off higher. Okay, so basically we have a 1-2 setup. This is going to become much more likely below the 171 level, which was here. Okay, so nothing bearish on this chart in general until price breaks below 77 cents, but a break below 171 could potentially bring it down to a minimum of 130, ideally 108 or even 77 cents. So that is the support zone if price breaks below 171. As long as 171 is holding, it can technically push higher in the current structure that I have on the chart, but below $2.16, that will already get less likely. Yeah, I mean, the overall uptrend isn't broken, but be aware it's moving in a trend channel. And I guess already when the channel breaks, that's another sign which would have short-term bearish implications. It's not a chart I particularly like. It doesn't lend itself so well for Elliott wave analysis, okay? So we can use trend channels, for example. We can use structural support and resistance, but bear in mind that on a chart like that, wave counts change frequently, yeah? It is what it is because it looks more like a diagonal structure. It's not impulsive. Doesn't mean it couldn't go up higher, okay? But we just need to be aware that if we have a structure like that, and Elliott wave tells us, be aware of that wave counts will change frequently and we can get headwinds where we normally wouldn't want them, and so on. Okay, that's my update about Render. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.